Investing in tech stocks has become increasingly popular in recent years, and for good reason. The technology sector has outperformed the overall stock market by a wide margin over the past decade. In this video, we are going to talk about investing in technology stocks. If you are interested, so stay tuned into the video. Definitely you will find some value. Let's move on towards the topic. First, I would like to share 10 reasons with you why you should invest in tech stocks. 1. Strong historical performance. In the past 10 years, the technology sector has delivered an annualized return of nearly 13%, compared to just over 7% for the S&P 500. And over the last 20 years, tech stocks have returned an annualized 16%, more than double the return of the broader market. 2. Innovative and exciting companies. The technology sector is home to some of the most innovative and exciting companies in the world. Companies like Amazon, Facebook, and Google are constantly pushing the envelope and introducing new products and services that change the way we live and work. 3. Rapidly growing industry. The technology sector is one of the fastest-growing industries in the world. Global spending on information technology is expected to reach tens of trillions of dollars in years to come. 4. Lucrative opportunities for growth. Many tech companies are still in their early stages of growth and offer investors lucrative opportunities for long-term capital appreciation. For example, shares of Amazon have skyrocketed more than 2,000% since the company went public in 1997. 5. Strong fundamentals for growth. Tech stocks tend to have strong financial fundamentals, with many companies posting double-digit sales and earnings growth. For example, Facebook reported revenue and earnings growth of 47% and 63%, respectively, in its most recent quarter. 6. Favorable demographics. The technology sector benefits from favorable demographic trends, as younger generations are increasingly comfortable with and reliant on technology. For example, millennials are expected to make up 75% of the workforce by 2025. Are you still watching my video? So definitely you will like my other videos as well. If you are interested in stock market or investing, and you don't subscribe to my channel yet, so subscribe right now, because I upload these types of videos regularly. Now move on towards the topic. 7. Resilient during economic downturns. While the overall stock market tends to be volatile during economic downturns, tech stocks have historically been more resilient. For example, during the 2008 financial crisis, the tech-heavy Nasdaq Composite Index actually rose, while the S&P 500 fell by nearly 40%. 8. Attractive valuations. Despite their strong historical performance, many tech stocks still trade at relatively attractive valuations. For example, the forward price-to-earnings ratio for the tech sector is currently around 18, which is below the historic average of 20 for the S&P 500. 9. Dividend growth potential. Many tech companies are now paying dividends, and some have significant dividend growth potential. For example, Apple's dividend has grown by more than 25% per year over the past 5 years. 10. Long-term tailwinds. The technology sector is benefiting from a number of long-term tailwinds, including the continued growth of the global economy, the proliferation of mobile devices, and the rise of artificial intelligence. These trends are expected to continue for many years to come, providing a strong tailwind for tech stocks. So these are 10 solid reasons why you should consider tech stocks. Now it's time to share some top tech stocks to start our investing journey. Stay tuned to the video, and if you don't subscribe to my channel yet, so please subscribe. Let's move on towards the topic. Top tech stocks. Aero Electronics, Analog Devices, and First Solar are the top tech companies. Aero's stock fell late last year, turning the semiconductor distributor into a top value stock when it posting record third-quarter sales amid a depressed electronics market. Analog leads its peers in a key measure of earnings and revenue growth thanks to rising production of electric vehicles that use its chips. First Solar shares have more than doubled in the past year, boosted by passage of the Green Energy-Focused Inflation Reduction Act. These companies are leading their category as tech stocks, represented by the Technology Select Sector SPDR Fund, have lost almost a fifth of their value in the past year, compared with a 13% drop in the Russell 1000 index. Best value tech stocks. Value investing is a factor-based investing strategy that involves picking stocks that you believe are trading for less than what they are intrinsically worth. usually by measuring the ratio of the stock's price to one or more fundamental business metrics. A widely accepted value metric is the price-to-earnings P/E ratio. Value investors believe that if a business is cheap compared with its intrinsic value, as measured by its P/E ratio, in this case, then its stock price may rise faster than that of others as the price comes back in line with the worth of the company. These are the tech stocks with the lowest 12-month trailing P/E ratio. 1. Aero Electronics. Aero provides technology products and services, including electronic components, distribution, and solutions for clients in enterprise computing. Aero employs nearly 21,000 worldwide and serves more than 220,000 global customers. 2. Avnet. Avnet provides supply chain and logistics services, distribution, and design support for electronic components. It ships about 283 billion units annually and employs 15,300. 3. Vontier Corp. Vontier sells equipment, software, and services for mobility technologies used in vehicle tracking, fuel dispensing, point-of-sale and payment systems, and remote management. It has about 8,500 employees globally. 4. Intel Corp. Intel designs and builds semiconductors and provides products and services related to cloud, network, and edge technology. The company plans to increase the number of transistors on microchips from 100 billion in 2022 to 1 trillion by 2030. 5. HP. HP sells desktop and notebook computers, workstations, retail point-of-sale systems, displays, printers, and hardware, and support and services. HP's customers include individual consumers, businesses, and governments. The company holds 27,000 patents and operates in 170 countries globally. Fastest-growing tech stocks. These are the top tech stocks as ranked by a growth model that scores companies based on a 50/50 weighting of their most recent quarterly year-over-year percentage revenue growth and most recent quarterly year-over-year earnings per share growth. Both sales and earnings are critical factors in a company's success. Therefore, ranking companies by only one growth metric makes a ranking susceptible to the accounting anomalies of that quarter, such as changes in tax law or restructuring costs, that may make one figure or the other unrepresentative of the business in general. Companies with a quarterly earnings per share or revenue growth of more than 2,500% were excluded as outliers. Some fastest-growing tech stocks are here. 1. Analog Devices. Analog is a semiconductor maker that sells integrated circuits, software, and other products to the automotive and communications industries. It has 125,000 customers globally. Operating income increased by 10 times to $1.1 billion in the latest quarter, as revenue grew 39% to record levels, driven by performance in the industrial, automotive, and communications segments. 2. Enphase Energy. Enphase designs, builds, and sells solar energy equipment and hardware including microinverters, energy generation monitoring equipment and software, and battery storage products. It has installed more than 52 million microinverters, which are used to convert a direct current generated by a solar device into alternating current. 3. Sunrun. Sunrun develops, installs, sells, and maintains residential solar energy systems to U.S. customers, including individual homeowners and commercial developers. 4. NCR Corp. NCR is a point-of-sale transactions company that provides services for self-directed banking, retail stores, and restaurants. It employs 38,000. 5. Monolithic Power Systems. Monolithic is a semiconductor company that also provides system integration technologies. Net income increased almost 81% to $124 million for the third quarter of 2022, while revenue surged by more than 53% to $495 million. The company reported improvement in all end markets for the period. Let's discuss some advantages of technology stocks. 1. Investing in innovation. Investing in technology stocks allows investors to back revolutionary ideas that have the potential to improve people's lives. Technology companies of all sizes continually push boundaries to be first to market with game-changing technology, whether it be Apple with a new health feature for its iWatch or a startup developing a game-changing semiconductor for the automotive industry. 2. Growth potential. Technology stocks offer the potential for sizable gains, with investors usually prepared to pay a premium for future growth. For instance, as of January 2023, the technology sector traded at 20.5 times forward earnings. By comparison, the energy and financial sectors had forward price-to-earnings ratios of 8.1 and 12.9, respectively. All of the biggest gains can be found in small-cap technology stocks. Even mega-cap tech titans such as the original FANG members, Meta Platforms, Amazon, Netflix, and Alphabet had an annualized return of 20.9% over the past decade as of 23 January 2023. Disclaimer: the comments, opinions, and analyses expressed herein are for informational purposes only and should not be considered individual investment advice or recommendations to invest in any security or adopt any investment strategy. Though we believe the information provided herein is reliable, we do not warrant its accuracy or completeness. The views and strategies described in our content may not be suitable for all investors. Because market and economic conditions are subject to rapid change, all comments, opinions, and analyses contained within our content are rendered as of the date of the posting and may change without notice. The material is not intended as a complete analysis of every material fact regarding any country, region, market, industry, investment, or strategy. I hope now you know all about technology stocks, so that's it for today. And if you will find my video valuable, so don't forget to like and subscribe. We will meet again with another interesting topic. Till then, stay safe and stay happy.